Now on to our next big story here, a very interesting one from through the week. On the 3rd of June, the Central Bank of Nigeria revoked the banking license of Heritage Bank PLC, raising curious questions about how depositors and shareholders would fare in terms of getting back their funds. The CBN had explained that its decision on the license revocation was made due to the bank's inability to improve its financial performance. The regulator said Heritage Bank, which was nationally licensed, has not improved and has no reasonable prospects of recovery, thereby making revoking the license the next necessary step. According to the CBN, the Nigerian Deposit Insurance Corporation, NDIC, has been appointed as the liquidator of the bank. The NDIC said it would pay a maximum of 5 million naira issued deposits to each customer of Heritage Bank. However, it said depositors with funds more than the issued deposits will be paid as and when the asset of the closed bank are realized.
Now, this is not the first time the bank has run into issues with regulators. Heritage Bank was founded in the 1970s as a Société Générale. Now, the CBN in 2006 closed down the institution due to failure to meet new capital requirements of 25 billion naira, after which the bank successfully challenged the closure in court. Now, the CBN reissued the license as a regional bank in December of 2012. Having acquired the banking license, the new ownership rebranded the bank as Heritage Banking Company Limited and opened for business on March 4th, 2013. In October 2014, Heritage Banking Company met the requirements of Asset Management Corporation of Nigeria, AMCON, and the CBN for 100% shares in Enterprise Bank Limited. Now, in January of 2015, AMCON officially transferred ownership of Enterprise Bank to Heritage Bank. Now, with the bank now immersed in another regulatory woes, we look at the implications of the license revocation on depositors, funds and stakeholders, and more. And so joining us to discuss this is Gospel Obule. He's a chief economist for Streetnomics. We're also joined by Adeshina Olumide. He's also a financial analyst, and he is the head of quantum economics. Well, gentlemen, thank you so much for coming on. We appreciate you for doing this with us this morning. So let's get started, guys. What are the primary reasons that led to the revocation of, Heritage Bank's license being revoked by the Central Bank of Nigeria?
Mr. Gospel, please, you can go ahead.
Yeah, all right. Good morning. Yeah, I wasn't sure if it was
Sorry about that.
Sorry about that.
Yeah, really great to be here today. Yes, so I mean, for every economy that must grow, develop, and scale in its potential towards prosperity, the financial sector and monetary dynamics of that local economy has to really be, safe to say, at A game level, if not A plus. And many times it borders heavily around how the players within that sector are evolving, how they are growing stronger, how they are sustainable in terms of the business functions, the level of capital, liquidity base and all that, also the quality of leadership and all. And if you look at across all these metrics, Heritage Bank is one of those banks that pose as a strategic risk to the overall growth and development of the sector. And in many times in my several outlook and advisory engagements, I listed a couple of banks who also interestingly fall into the same category of Heritage Bank. So I'm not surprised to see that they've been flagged off, and the revoking of the license is a top conversation on the news now, and many other dynamics are evolving. So yeah, it's just what it is. And across those counts, the banks haven't done well, really. If you think about it very well, how many Nigerians do you know have an account with Heritage Bank, and how many really innovative engagements have the bank done in terms of playing its role or playing its part within financial sector development? So strategically, in the strategic sense, I don't think that the bank has positioned itself enough as a sustainable institution. As such, I think that the central bank holds some sense in seeking towards liquidating and managing the downsides of these risks.
All right, then, Gospel, thank you very much. Olumide, let me come to you. Now, the NDIC has stated that it will pay a maximum of 5 million naira issued deposit for each customer. Now, beyond that, how secure exactly are depositors' funds beyond that issued amount?
I think just like the last speaker highlighted, look at the drawing strategy of the present CBN team. They intentionally are allowing banks that cannot meet their obligations to fail. And rather than using taxpayers' funds, they are using the systemic template seen in the US Fed. And that's pretty much sell assets to cover liabilities. But prior to Heritage license being revocated, you saw that the CBN came with different strategies. For depositors' funds, I think it's pretty much safe. Out of about 2.3 million depositors account, just 4,000 have above 5 million. And pretty much the NDIC upgraded the insurance coverage to 5 million. So we have 99% of those depositors with less than 5 million. So it's as good as saying that we have less to worry about. But that doesn't mean that those 4,000 are not systemic, because when you look at the numbers, you see that powerful companies have accounts there, and also the federal government agencies has exposure. So I think what they are looking on is that they don't want banks that have toxic assets to be contagious. And Kados buttressed the point that he is going to go aggressive on regulating the banking industry much more than we saw in the last under the Emefiele's era. And you could see the recapitalization exercise where a lot of banks now are trying to buffer their balance sheet and liquidity. It's really a tough era in the banking industry now, with rates really at elevated levels, and knowing fully well that CRR is about 45% cash reserve ratio. So banks don't really have so much to play around with. And the complexity around cyber security. We've heard cases about theft and identity loss in the financial space. So the Apex Bank pretty much is planning ahead, but like the whole thing, it's little to worry about. This is a bank that posted.
Olumide, I wanted to further on something that you said. Now, the NDIC says that they're going to pay these funds when the assets have been realized from, liquidating the bank. However, will they be obligated to pay in interest whatever these depositors have inside of the bank at the moment? Are they obligated to do so?
It depends on the. I'm not an NDIC official, but I can tell you for free that looking at the books and looking at it's going to be easily covered, because when the NDIC, Heritage Bank assets, if you look at from the holistic view, it really can cover, because the total amount of depositors funds were about 650 billion, and loan portfolio was about 700 billion plus. And when you look at non-performing loans, we're around 580 billion. Looking at the strategy, what they're doing now is trying to sort retail depositors as soon as possible, so that to cause less contagion in the industry and unlikely bank run, But I'm not a party to say how that will be done, but I can tell you for free that the NDIC is on top of the matter right now.
Gospel, there were stats there that Olumide just pointed out. Number one, the depositors, the monies that we know was in their spreadsheet for Heritage Bank was about 600 billion naira. And the loan portfolio is over 700 billion naira. And so it begs to ask the question about the overall health of the bank and how this was able to slip through the radar for this long before revocation of the license of Heritage Bank. I'd like you to speak to that, especially on, what does the revocation of, of the bank, of their license indicate about the overall health of our banking industry or our banking sector in general?
I particularly do not think that the current banking system in Nigeria right now is healthy. And what we've seen with the Heritage Bank situation it's just a case of weakening regulatory practices over the years, and probably now an attempt to sort of build momentum to reform from a regulatory standpoint, and that's what we're seeing now. And in many cases, also tells us the fact that many banks, just like heritage banks, may not be as healthy as it seems. And again and again, you've seen that there are many components that sort of make up these numbers, and those sometimes evidence can also be built up in context. So, and that's to tell you that more scrutiny needs to go into what banks are doing. More scrutiny needs to go into who is doing what within banks, who is investing what, where are they investing in, what assets are they investing in, what sectors are they investing in, are they increasingly doing work that is driving sustainable business, that is building the reputation of not just the bank but the financial services sector, or expanding the base of the financial services sector, doing business for social good, as the case may be. So if you look at it again across these metrics, you've seen that Heritage Bank has really not done much in that area. And even in areas where they seem to have done much, it could have been potential series of activities or evidences that are being made up just to ensure that these institutions look good. So many institutions in Nigeria are very, very, very almost at the verge of bankruptcy. And that's to tell you that in the context of growing financial services in Nigeria, more work needs to be put in terms of regulatory dynamics, internal controls, identifying and mitigating risk early, and also trying to gauge what the brand value of many of these institutions are. And in the minds of the average Nigerian now, they may not want to invest or deposit money with Heritage Bank even before it's license withdrawal, as the case may be. And that's because the bank has also not presented itself as a reputable institution, worth investing in by people. So there are lots of conversations that have built up to this level. And what we see now, in all fairness, is still probably a surface level of weakness on a healthy state of affairs within the financial services sector.
Gospel, let me jump on that. On Thursday when we spoke, you actually noted the same thing you just said here about the health of banks inside of Nigeria. And with your research that you carried out, you noticed that there are many popular banks that are even still facing these situations and might be going under soon. However, in light of what's happening with Heritage Bank right now, are there any anticipation regarding changes or tightening of the banking regulations by the CBN? Are we going to be seeing that happening anytime soon to help us, build our confidence in the banking system in the nearest future?
Well, we expect that there would be better regulations, and that's because the current central bank governor seems and is interested in managing the downside of all of the years of poor regulation in the financial sector, and he seems a bit more committed to this regard. And but the question again becomes the fact that you have a complete ecosystem of what we term as extractive institutions, and when you have extractive institutions at play, it means that policies, structures, and systems may be designed to favor a couple of individuals. And over time, well, it happens in many other countries as well, even in the West, few individuals or institutions may have grown stronger than the regulators themselves. So how do you regulate a system that is uneven in its structure, in its design and delivery of services? So that's one of the challenges that I believe that the current central bank administration will have to deal with. And how do you ensure that regulation, in a sense, is forward thinking and smart, leveraging best use of technology at the cutting edge of knowledge, or best use of tactics to keep regulations, at the fore of growth and development in the sector? How do you ensure that regulation fosters innovation and doesn't, sort of confines it? So these are the very different dynamics of capabilities that the institutions may need to build, not just the central bank, and many other institutions, NDIC, AMCON, and a couple of them like that are under that block need to build. And in all fairness, we haven't seen much of that. So it has to be a collective responsibility to ensure that in a sustainable sense, the central bank is being able to drive reforms in the financial services sector. And also, how do you ensure that increasingly we can have more healthier banks? There are many banks in Nigeria that we don't really know what they're doing, and we're not even sure. If you walk around the street and you ask up to 5 people, do you bank with A, B, and C? You're likely going to hear a no than a yes. And you also case where increasingly consumers are tilting more to more financial services technology platforms than traditional banks and all that. But then again, you have the issue of data security, protection, safety faced with the former than the later. You also have a case where the fintechs are more technology driven than financial services driven. You
Absolutely.
know, in terms of
That's
capabilities
absolutely true.
Now, Gospel, you just pointed
out.
out very, very poignant there, very pertinent issues there when it comes to the fintechs and the DPMOs, which are the deposit banks, right, that we have. Two disparating, you know, one is ahead and then the other is still way back in the infrastructure, which takes me to you, Olumide. How then can there be synergy, right? Can the traditional banks learn from the fintech? Can there be some sort of synergy between the two? I mean, you just pointed out collaborative effort with all, you know, regulators and this time the Apex Bank. But is there a way that it can be in sync? Because, I mean, looking at the stats, how did Heritage Bank slip through the radar this whole time?
I think what's happening at Heritage Bank is a bit exaggerated, and I share a very diverse view with the last speaker because I've covered African banks for more than 2 decades, and I can tell you authoritatively that Nigerian banks are quite strong. If you look at Q1 results, for example, GT made a pre-tax profit of 509 billion, the highest in its history. You look at Zenith Bank, 320, First Bank, 239. Access 203, look at UPA, 156 billion naira. Now, most of those gains came from 3 strategies. We had a very solid treasury department team. They diversified. In the case of Access, 1/3 of its income came from foreign subsidiary. So many of these banks have positioned themselves to be immune to the reality of the Nigerian economy. Like I mentioned earlier, Heritage Bank is one of the 25 banks in the country that pose less systemic risk in terms of volume of customers. Access has 58 million customers. Heritage has 2.8. If you look at the United States, for example, we have about 49 banks in stress as we speak. This is the working power. So it's healthy for you to have a space where some players are kind of illiquid. But I think to be unfair to say Nigerian banks are quite unhealthy because as we speak right now, what the Apex Bank is trying to do is consolidate their strength and position them for the next frontier. Because if you look at most of these banks right now, their non-performing loan averagely is up less than 5%. Capital adequacy ratio is still held.
We seem to have lost Olumide there. We seem to have lost connection with Olumide there. But the conversation has been on Heritage Bank and, a larger extent, the financial institution in Nigeria when it comes to banking sectors, the traditional deposit banks, as well as fintech, which is now, and also the regulators as well, CBN. This has been a very robust conversation when it comes to, you know, talking about the issues and how best to, you know, sync things together when it comes to accountability, transparency, and also putting into account and rest assured the customers as well. I want to say thank you to Gospel Obule, who joined us earlier as well. Gospel, many thanks for doing this with us. And also Olumide Adesina as well, who joined us live from Paris, France, we seem to have lost connection with. Thank you, gentlemen. You've added much light to these issues and adding your expert opinion to the, you know, scenario as we anticipate what the outcome will be in the coming days.
Thank you very much.